I get the question all the time, when do we short a top? When can I sell a top? Now, in this example, this was late on a Friday. We're flirting with all-time highs. All-time highs are 63s. You can see that we're trading in the low 50s. The prior day's high was 51.75, I believe. And so we start to get a rounding, knuckling type pattern. Now, when I say knuckling, here's what I mean by knuckling. Raise your hand and just relax it. And you can see that this is exactly what the chart pattern looks like. It literally looks like this, like my hand and my wrist and my arm. So how do we play that play without being too early, without breaking our rules, without violating process, remaining in edge? Let's take a look. If we zoom in, we can see that it starts to turn down and it's meeting our moving averages and our, I believe, prior day's settlement. And we have yesterday's high as well. So it closed near the highs yesterday. So we say to ourselves, well, is this support? Is this where they're going to come back in and buy it? Let's wait and see. We would love to be short something like this. It would be a dream, okay? But reality is you might be a little bit too early. So let's take a look at when we can find a great stop to place the entry with once we see the sellers actually come in and break structure. This is what it looks like. Here's the break of structure. It's starting to remove the rest of the green that's on this side. If we look at this as support, we want it to break out of the box. We want it to fall. We want it to be certain. Can't be certain. We want to have more certainty. We need a better signal. The trade is down here. Now, you're probably thinking, why would I short after it's already moved down? To confirm that the sellers could still be in play. So what we're going to do is we're going to take this beautiful little green bar ignore here that gave us the perfect stop, and we're going to try to enter as close to this 49 as we actually can. Now, we may not get perfect. It might give us 48.50, 48.75. The most important thing is your stop is 50 quarter, 50 half at the highest. So then as we're looking for this trade, we say, okay, great. We've got the stop. We've got the entry. How do I trade it? Well, what I'm going to do is I'm going to take profits at a 1-to-1 risk-reward ratio. I want to make sure that I'm locking in, I'm playing with house money. Anything past the 1-to-1 risk-reward ratio, what I'm going to do is I'm going to trail it, my stop, behind the local swing high. Now, here's the beautiful thing about the Magnus indicator. It creates the stop levels for you. So you can see here, after it falls and it bounces around here, the stop goes here. Now, here's a beautiful thing that isn't in the write-up that I'm about to show you. There's the trade repeating itself again. So now you have an add order or two trades in a row on a perfect knuckling reversal. This is where you look to take a short. Now, as we always want to define, where did the old losing you lose every single time? The answer is right where you went short. Think about it. First green bar turning green, got tails, looks good. Underneath the 20 that's still sloping up, I'm going long. Bink! Right here. Just lost all my money. Oh, nope, another chance here. Okay, now it's turning green. Now it's going to go up. Here comes the buyers. Oh, there's low volume. There's no more sellers. Bink! Lost all my money again. When we're taking the notes and we're looking for the information on why am I not profitable, the answers you're looking for are always, where did I lose when I used to trade without the information? This is how we look at these trades. I hope it helps everyone. Thanks, and I'll see you in the room.